Hello, welcome, and sorry. Raymond's trying to trick me here right off the hop with triple sorries. Welcome back, everybody. Happy Friday. It's a pleasure to be with you all. I'm Jor. These are my two buddies and co-hosts, Rajat Forrest. And this is the Maple Bitcoin Friday stream. It seems like we were just here, boys. That was the fastest week of my life. Or was that 2 days since our last live stream?
That's probably why it feels so soon.
Yeah, and I wasn't here last Friday, but I heard you guys chirping me at the start of it.
We did. I was Jor for a moment there.
Well,
and then
like, wait,
Don's name was so close to yours that everyone was like, wait, what happened to Jor?
We just got the weirdest news of the week. Rajat does not drink coffee. I did not know that. I wouldn't have partnered up with him if I knew that before.
Yeah, I barely drank any coffee in my life. So I was telling these guys maybe like half a cup my entire life. I just don't drink coffee.
That's crazy. Rajat, I've noticed this when we first came on here, but is your microphone on?
Oh, yeah, your mic sounds a little echoey. I was wondering that too.
Oh, you're right.
Yeah, we got good ears. Good ears. Anyways, this show today is titled How Long Until the US Dollar Collapses? So we had a really good chat on Wednesday together, and we're going to carry a bit of that forward into today's show because it was just such an interesting topic. But before we do that, we're going to talk about a couple of different things going on, interest rates, the imminent US dollar collapse, what it could look like on the other side. And then, of course, at the end, we'll do a little bit of Q&A. So if you do have any questions throughout the show, you can put them in caps, and we will try to address them. If you have something that you absolutely want addressed, you can send in a super chat or you can send in a zap to our Maple Bitcoin wallet there, which is right beside Rajat's head. And that's the best way to support the channel and get your question answered. So where do we begin, boys? Who wants to kick it off and where? Oh, I got the hiccups here. Nice.
Can we start with the topic of the video? How long until the US dollar collapses? I think there's too many people who are way too bullish on the dollar, and then there are too many people that are way too bullish on Bitcoin. So I think there's a balance. I made a video this morning where I said how we're probably going to see the US dollar collapse, the global dollar financial system, dollar-based financial system, collapse within the next couple of decades. So what that means is, let's say, for example, we are in a recession today. We have a massive collapse, like the Great Financial Collapse, Great Financial Crash. We have something in the next couple of years where the market collapses, and then we go through another cycle of 15 years. And then at that point, I think so many people are going to lose trust in the US dollar. So I think that could happen over a couple of decades, because the first one, the 2008 one, was big. This one's going to be even bigger, and then the next one's going to be massive, and nobody's going to want to come back. So that was my reasoning. But I got a couple of comments where people were saying, oh, it's going to take 2 years. I don't think it's going to be that quick. I don't think it's going to take 5 years. I mean, what do you guys think?
I mean, the collapse of the dollar, it's just collapse of a currency is just a very difficult thing to predict accurately of when it's going to happen, because there's so many forces that don't want that to happen. There's like right now, like basically the US is like the main talking point when it comes to currencies, right? And everybody else is just doing slightly worse than the US pretty much. And what's crazy though is like the US government will take on $4 of debt to earn $1 of GDP growth. And it's just completely not sustainable. And those numbers aren't exact or anything, but like that gives you the idea, right? And so when you're doing that, that's like you taking on credit card debt to invest in something. Like you're taking on like a 20% credit card debt to invest in something that earns 5%. So
and that's going to keep rising too. That $4 is going to be $5 and $6 and $7.
Exactly. It's just going to get worse and worse because because more of the GDP has to go towards paying that interest. So less of it can go to growth and less opportunity for outsized growth returns if there was any available, but there really isn't for the behemoth of the US government. So like, what's the way out? You know, like we've seen this happen before. I think it's hard to exactly figure out, but there's like, it depends what basket of currencies, what historical time frame you look at, but fiat currencies do end up collapsing, Like they all end up collapsing. But it's, some people say it's 27 years. People have refuted that, said it takes 50, 90 years. It really just depends on how much belief there is, because fiat is only backed up by belief. There's nothing else backing it, right? So, I mean, it's debatable as well of when the US dollar became fiat. Like, people point at 1971, the gold window closing with Nixon, but dollars weren't redeemable for gold if you were a US citizen. It was only if you were foreign. So was it fiat for some and not fiat for others? And then when I think it was France or Germany, it was one of those countries, or maybe both, they tried to redeem their gold and take their gold back, take it back from Fort Knox, and they were denied, and they sent warships over. And it's just like, this is like this currency war that we're in, and the death of the dollar. It's been happening for a very long time. It's hard to accurately say like how long the US dollar has been dying for, unless you measure it in something like gold, or you measure it against something like Bitcoin. I mean, Bitcoin has less of a time frame, but it looks dead on those things, and yet people are still saying, okay, well, we still have this amount of time to go, this and that. It's just, when do we when do we look at this patient on the table with half a heartbeat and say, we're going to call it quits, we're not going to try to zap this thing back to life?
Yeah, that was kind of my thoughts too. Is you could point out a couple different times in history where people might think that the dollar died. Like I would say 2008, even though it seems like we're still kind of functioning here. Like I think that's when everything changed, and I think that was really the last day that the dollar had as status. Even though again, it's just kind of going along. But if you really stop and think about how complex this system is that we live in terms of the US dollar and all these different countries being impacted by that directly, indirectly, there's just so many moving parts, and it takes a very long time, I think, to iron out all those details and for everybody to get on the same page. So kind of my opinion is that it's already dead, but it's going to take a while for most people to figure that out. So I guess depends how you want to take that. But so my argument would be she's toast.
She's toast.
Yeah. Can you share my screen there, Jor?
Yep.
So this is a chart for the price of the US, or the price of gold in terms of US dollars over time. So at one point, gold's price was actually fixed. And even then, there was a lot of manipulation going on because they were printing more money than they had gold in reserves. So you can see here, at a point it was fixed at, I think, $20.67 an ounce or something like that.
Mm-hmm.
And then it jumped up to $22, and it jumped up to $26. Then it jumped up to $35, and it stayed there until 1971, until 1968.
Yeah.
So 1968, it started going up. It seems like it started going up in December 1969. So after 1969, you can see that it explodes, and it just keeps going. Like, this is crazy. Like, these numbers don't even look like they're relevant. Right. So I think this was the collapse, right? So would you guys say that maybe it was the collapse where in 1969 it started going up?
I mean, yeah, probably. I mean, you guys know about the story about 1935 there, what happened there, right? Like that's crazy too. Like that's an admittance.
Wait, 35? Are you talking about 33?
33, yeah.
33,
or whatever it is there. I mean, you can track it exactly when it happened.
Was that Bretton Woods?
Yeah.
Yeah,
no,
so
that
that's
was 6102.
Yeah, so it's the reevaluation of gold. So
Yeah.
they basically said you're not allowed to own gold. We're going to confiscate gold, and then once that happened, they revalued it. So it was pegged to 20 something, and then it was revalued at 30 something. I don't know the exact numbers off the top of my head, but essentially they stole all that value from anybody that they confiscated the gold from. And they had to revalue it because they went to war and inflated their currency away. And they couldn't actually back the dollar to gold at that pegged amount. So they had to revalue it because of that reason.
Yeah. Yeah.
So I don't know. That to me is like, I don't know. It's hard to say because
this
gold
is what you're
was,
talking about here.
Yeah. From $20.67 to 35 an ounce. I don't know. It's hard because gold stayed relatively stable-ish after that, it looks like. I don't know how accurate that data on TradingView is either. It seems like there's like not much fluctuation in those time frames, but
it stayed stable because the system was manipulated. No, like that's what I would think. Because
maybe
if they can keep adding more dollars to the system, because most people, if they trust a bank, a government, it's not like they start taking their money out, right? The trust is built over time, and then when that trust is built, that's exactly what's happening with the dollar today. So there's all this trust that's built. People are holding treasuries. They're holding on to as many treasuries as they can. The trust is there, and now the U.S. government is basically like they're extracting the value, or they've been extracting value for a while. But the trust was built over time, and now people don't even question it.
So you think they were able to keep because it would have been pegged at that level and stayed at that level because it was actually redeemable for that amount of dollars, right? So they were able to do that from 1933 to 1968, basically, is when it started to decouple, and then officially they went off of it at 71.
So I think this was because of Bretton Woods. I think Bretton Woods is in 1944, I believe. So during Bretton Woods, they basically made an agreement that the world will use the US dollar as a savings vehicle. So just to make it so that we have one form of money for the entire world, trading is easier. So after 1944, the world pretty much agreed that, okay, we'll keep using the US dollar. And then what happened was, I guess people started losing trust in the dollar. That was in I guess I was here, 1970. And then this is what led to those massive bank runs with the Nixon shock.
The Nixon shock, yeah. It's just crazy that they were able to actually keep it that stable for that long. Like that's actually pretty impressive.
Because it's probably because they have such a huge hoard of gold, right? They can, if people need to buy it, they can take it, and they have this centralized amount that if people need to take it, they can give it to them. But then at a certain point, they kind of start running out, and that's when they lose control. I think that's exactly what's happening with Bitcoin.
Do you think that's also because a lot of people just generally had more trust in what the government said back then too? Probably.
Oh, definitely. Because I guess we didn't. I mean, we didn't
Less
have
information
back then. There's no like crazy people who are talking about really, really like off the deep end stuff. But then I feel like people can now just spread the common sense, right? People can spread, oh, the US dollar is dying, get rid of it, give it away. And now what are people doing? They're buying assets. That's why everything is going up, right? I noticed that in 2021, 2020, a lot of there was a huge movement in finance influencers, right? Like Gary's Economics, he started, I think it was in 2020.
Oh yeah.
Right. And that's because of the pandemic. More people had more time. So people who were sitting at home, I guess that's the K-shape, right? So that's the K-shape recovery, where people who are working from home and they were investing and they were paying attention to what's happening to the markets, they started recovering, and then everybody else just gets worse and worse. But then that's what leads this is what leads to that kind of stuff, right? The asymmetrical information.
Yeah.
Like the information that we have today, there's so many people out there who have no idea what's happening with Bitcoin. They don't care. You can't even convince them to buy Bitcoin if you tell them like, oh, this thing is going to change your life in 20 years. They're just not going to do it.
Yeah.
But then there are other people like us who are just crazy on this thing, and we're like, this is all we think about.
All daydream about Bitcoin. That's Rajat's brand.
I
mean, look at that. Look at that performance of gold, though, once it started to decouple and once it went off its peg. Like, in some respect, this could be what Bitcoin does.
It's exactly what Bitcoin's doing.
It's what Bitcoin is doing. Yeah, exactly.
Yeah.
It's just, I mean, that looks insane. That chart looks insane. And that chart is, I mean, people will say whatever, but like gold is a representation of like a store of value. It's the original sort of non-controlled asset. It's a sovereign asset, bearer instrument, sovereign asset. And that chart looks insane, right? From $35 to whatever it is there, 406. Way higher. 3,000. Oh yeah. Oh right, because this is per ounce.
Yeah.
I mean, it's 3,680. I mean, that's just insane, right? So Bitcoin has had that in 16 years. It's had this same trajectory of basically like being stable at nothing, or the cost of electricity when the hash rate was below what one BitAx puts out. and now it's in this sort of parabolic rise. I mean, that looks so similar.
Yeah,
That chart.
it's the same thing. It's because both of
just
them
a
are
different
bearer
time
assets,
frame.
right? The
Yeah.
difference is with Bitcoin though that you can actually take self custody of it and you can take it immediately. So think things like, okay, so the way that I see it, like the FTX collapse, if it happened in the gold market, it would have probably taken decades. Because who's going to FTX to take their gold out, right? But with social media and with Bitcoin being so liquid, you can just take your Bitcoin right away. You can just put an order through, and if anybody gets rejected, because we all know that Bitcoin transactions take 10 minutes, if anybody gets rejected, that goes to social media immediately. And then that just leads to a massive bank run. And that's what happened with FTX, right? There's no central bank. There's no party in the middle that's stopping a Bitcoin exchange from going bankrupt. So with Bitcoin, because it's that bearer asset, you can take self custody, and you can take self custody of however much Bitcoin you want to. With gold, you can't do that, right? So did you guys see how people were withdrawing gold from London, and it was
Yes.
taking a month and a half to
Yeah.
complete that's exactly what was happening, right? That was basically a bank run.
Yeah.
Because otherwise, why would
A
they?
real bank run.
And
Right?
imagine how much it would cost, right? Like people complain
Yeah.
about fees on the Bitcoin blockchain when it becomes, when there's a lot of congestion, there's a lot of people wanting to send transactions. There's only so many aircraft that are willing to transport gold, and you're going to say, "Hey, I want my gold out. I'm willing to pay a serious premium." And then the next person says, "I want my gold out. I'm willing to pay even more than that guy." Like it's even more limited, the ability to push out gold from one location to the other in a situation like that.
Yeah.
Think about back in the day, we walk into the bank. I got a thing here I want to show for what the US dollar used to look like. But imagine when you go down to the bank and you want to get some gold, you got a couple of these certificates here, and all of a sudden the bank says, no, we don't have any gold. What do you do? What do you do in 1963 when you walk down to the bank and they don't have any gold there? You don't just post it on Instagram or Facebook or TikTok. Who are you going to call? Call some relatives? Banks
But
don't have
that's why-
money. Okay,
That's why they
well,
could do like bank holidays and stuff, right?
yeah.
They could just close down the bank.
Yeah.
And
I
that's
mean-
why it took so long for that whole thing
Yeah.
to play out. That's why I think that this is going to be an accelerated version of that.
Yes.
And I think if you're smart in that exact situation, you have that paper bill still because they're not going to redeem it for gold. You go find anybody else that is selling anything that is willing to
Oh.
accept that, and you offload that paper for something tangible, whether it's
That's
a
so
jewelry
smart.
store selling gold coins at a premium, whatever it is, you just get rid of that paper
as soon as you
and-
can.
as soon as you can. Yeah.
So it was actually in 1963 when they took the words payable to the bearer on demand. So you couldn't actually redeem your dollars for gold anymore after 63. And then it wasn't until 71 until it officially went off the gold standard. But even 8 years before that, the bank stopped giving out gold for these certificates.
Does that align with the gold chart?
The chart 63. See if
Let's
anything
see.
happened in 63.
I think there was a little bit of a bump, like a small bump, temporary maybe. Let's see. Okay.
And of course, this is what the dollar looks like now. It doesn't say redeemable
note
for
is-
anything. It says this note is legal tender for all debts, public and private. Federal Reserve note.
Yeah.
No, there was no bump in 63. It
Interesting.
stayed at 35. But then there was a massive bump in. But I guess that's because
Information.
maybe people like maybe what happened is they were able to give a certain amount of gold away, so they had a certain amount of
Yeah.
gold in their vaults, and they probably thought, oh, okay, this is temporary. If we can keep it going, if we can keep giving them their gold back, eventually they'll stop,
Yeah.
right? And then the news spread, and it kept spreading, and it kept spreading, and then I think France was the first country that
Mhm.
started taking their gold back.
But think about it. I mean, if you think about it this way, like even in 1963, even if somebody walked down to the bank and say, give me my gold for this certificate, and they said no, like again, information traveled much slower back then. And I feel like even 1971,
Yeah.
50 years later, there's 80% of the population that still thinks that the dollar's backed by gold right now.
Yeah.
In a world that's full of information in a second. So I can see why there was a bit of a lag there between people seeing that there's a problem and then people reacting to such problem.
Do you guys remember? It was a couple years ago with I mentioned already Silicon Valley Bank, but that was a huge wake up for me. That was like, oh, Bitcoin is so important because Silicon Valley Bank basically collapsed in a weekend because of how quick people are able to withdraw money
Yeah.
and
Yeah.
how fast information spreads. And because it was a relatively small client base that were all technologically intelligent, right? It was all investors in Silicon Valley type startups and stuff, tech companies, businesses, right? With large accounts. And that thing collapsed in basically a weekend. And they immediately had a funding program to backstop it, to make the FDIC insurance higher than the 250,000 maximum. And like the digital bank runs that are possible now are just insane. So like a lot of people think like, oh, it's going to take another 50 years because of stable coins, because they'll keep convincing people the dollar has value. It could happen. It could literally happen tomorrow. Like it could happen so quickly because of where we are with technology. But I don't suspect it will, but it's just technologically possible for like everything to collapse in an instant at this point.
What would it even look like though? Like I'm just trying to think through it in my own head of if the dollar collapsed over the weekend like a bank would. Like what could potentially trigger something like that, and what would obviously the first place to react would be Bitcoin because it's the most liquid. It's open 24/7, 365. So Bitcoin would probably crash right off the hop. But would it? Like would it crash, or what would people do in that situation? I just don't know if it's actually possible for it to lose its value over the weekend. Would it? Like what would have to happen for that? An example.
The dollar?
Yeah.
I think for that to happen, somebody would have to, like some massive country would have to say, we're only accepting Bitcoin or something else for oil.
I feel like that stuff's
For
been like in the news for a while now, though. Like even like there's
But
countries who are
if they only execute their contracts in Bitcoin, that's never happened.
well,
think that's
Russia and
fine.
China and other countries within the BRICS nations have been using crypto and Bitcoin, I think, to do that for a while, but they've kind of already left the US dollar. Like China's sold the majority of its US treasuries. Like I see Russia, China, US, they pretty much live on different planets now. They used to all be under the same US dollar currency, but they're just kind of doing their own thing now. And it seems like it's the West. Something meaningful would happen in the West and that would trickle elsewhere. Whereas if something happens in Russia or something happens in China, I feel like it doesn't have the same ripple effect around the world as it would if it was the US dollar for obvious reasons. But
Yeah.
I don't think one event would be like enough. I think it would have to be a cascading events, and
Right.
maybe that would take longer than a weekend or a day. But like
Like a domino effect.
yeah, it's a domino effect. But it is like I'm saying it is possible. I mean, there's probability of literally everything, but just because it's like it is possible. But I think it would be like a lot of things would have to happen. Like a bunch of countries would have to just all of a sudden say like, oh, we don't accept dollars anymore, they're not worth anything, or we are backing our currency with this. Like it would have to be these sort of like simultaneous events that all happen that would show the true cracks of how the dollar is worthless. And yeah, it would cause pandemonium in all the markets, including Bitcoin temporarily. But the thing is that is actually a good question, is if something like that was to happen, maybe people's initial response would be to like get out of an investment position, but then they're getting into cash.
Yeah, that's what I mean.
Yeah.
Which doesn't make sense either, because then I think they would realize the folly of that, or holding cash, and then they would have to put it back into something. So there would be an insane amount of volatility because of that. But ultimately, it would probably be a very quick response for Bitcoin to go back up if it did go down initially. It'd be very, very quick.
I think people will start doing exactly what we said before there. Once they lose trust, they're gonna give away their US dollars for gold first.
Yeah, that's what I was going to say too. Like it'd be something like gold or
And that's
rushing
exactly
into real
what's
estate or
happening,
even the stock market.
But these
That's
things are
exactly what's
slow.
happening.
These things are hard
Yeah.
to. I mean, I don't know. Like, how much gold can you buy? Like, if you're a multimillionaire, where are you going to source all your gold from? Like, there's again, like, I don't know.
I also don't think
A gold
Sorry, go
dealer,
ahead, Forrest.
if you have a gold dealer, maybe, but even still, it's going to take a couple days for them to send it to you. Or like, there's a lot of mail services to buy and sell gold, or your local coin store, but they're not going to be able to service a couple millionaires, right? So like, that's tough for
I
physical.
also don't think that
bearers.
millionaires have much cash, though.
Yeah.
They might have stock portfolios, and if
Right,
they were
but
to
would they-
liquidate those,
Yeah, would they? I don't know. Probably, because you have to keep in mind that all those public companies, the majority of their balance sheet is made up of U.S. Treasuries.
But see,
Yeah,
that's one of the worst parts here, right?
Yeah.
Like the whole system is it's so fake because
Yes.
the wealthy don't even have to sell their assets; they can just borrow against them.
but in a dollar collapsing scenario,
No, I
that
mean like
even-
right now,
right now.
they can just do that, and they can make it look like. And as they borrow more money against their assets, they're basically feeding the U.S. dollar system. They're making it seem bigger, and they're contributing to the GDP because they're giving banks more loans or more income. I feel like that's it's already starting to fall apart because the poor can't afford anything. Like take a this is gold's chart over
Yeah.
the last little while. It's never gone this crazy. Like take a look at this. It's up from October
vertical.
2023. It's vertical, yeah.
Yeah, I mean, this is the thing. We're talking about a debt-based system, and everybody begins to realize exactly what you're saying, Rajat. If you have assets, you borrow against them, you get more debt because you'd be able to buy more assets, and they're going to outpace the cost of the debt, and that debt is denominated in dollars. Like this is all things they begin to realize, whether it's like explicitly or not, right? They just recognize, oh, it's like as simple as like probably one of the first books like any person that gets interested in money reads is Rich Dad Poor Dad, right?
Yeah.
By Robert Kiyosaki. And like in the first chapter, he starts talking about there's good debt and there's bad debt, right? And once people recognize that, they start to, oh, okay, I can get low interest rate debt and I can buy a house and the house is going to go up, right? It starts there. A lot of it starts in real estate for people. Then it goes everywhere else. Oh, my margin account's giving me 6%. And S&P performs 12%. Easy, no problem. I'll double my money, but any debt I get, I can double the value of it. And then all of that just leads to a huge amount of debt in the system. And all of that fuels the additional credit creation, the money creation, the debasement, which makes that debt worth less and less. So it's sort of a flywheel effect that way. But eventually that debt has to come out of the system in some way, either hyperinflation or like a quick recession bubble pop. And that's like, if we look back at 2001 or like the 2000.com, it's like debt fueled speculation of assets without proven track records and leverage within the system sort of coming out, right? You look at any crypto crash, it's basically the same thing. It's a leverage, delevering momentum to the downside. 2008, exactly the same. It's all leverage in the financial system and trading these mortgage-backed securities and rebuilding them and packaging them together. And all of this is mortgage debt, and none of it is actually getting paid. All of this, right? So it's the debt system fuels these bubbles and deleveraging events. And the longer you go without one, the less stable it becomes.
Right. Yeah, as you were talking through that, I was thinking to myself, and I don't know if I've ever really thought about this fully in my head. I've obviously considered it in different aspects of it, but like the cool thing for people with Bitcoin right now, anybody holding Bitcoin, is that as the dollar collapses, as we move into a more inflationary somehow environment, like the other thing that's going to hyperinflate is debt, which means that, if a sandwich costs $100 to get, that means that whatever debt that you owe, whether that's a mortgage or a credit card or a line of credit, because Bitcoin and gold will go up in relation to that to offset that inflation, that's going to go somewhere. So it'll go into Bitcoin, it'll go into gold. And so whatever debt you have is going to look like peanuts compared to your Bitcoin stack, because the debt is going to hyperinflate as well. The value of that whole system is going to go down so much that it might take, I don't want to give any numbers or timelines here, but you might be able to pay off your mortgage with 2% of your stack one day as this happens, because that system is tied to the fiat dollar. The debt system is tied to that US or fiat currency. And so as everything gets more expensive, if you're holding assets like Bitcoin and gold, whatever debt you have is also just going to be insanely cheap because of that, for the exact same reason.
It's going to be worthless.
Do you think that they're going to increase interest rates to make up for that, like credit card companies?
I don't know. Like, it depends how many people you want to destroy. Like, that's the whole thing that I'm so uncertain about, is like, how is this going to be managed without destroying half of the population?
Yeah.
And I feel like that's what they've been trying to do for the last 15 years. And it's just like they're just kicking it as long as they can without one going too far the other way. It's an insane balancing act of bullshit. That's really all it is.
Yeah. And you know what this makes me think of too is that, like, stocks, when you're buying stocks, you're buying into a company that's reporting earnings. Those are priced in dollars. They have financing, they have debt. All of that is in the dollar system. They are directly tied to the dollar system. Real estate is kind of the same, right? Like, you're buying it, it's debt priced in the dollar. You might be, if it's an investment, you're renting it out for cash flows, right? So it's all subjected to the economy, the US dollar economy. Gold and Bitcoin, they are priced in dollars, and that is where their connection to the fiat system ends.
Yep.
So
important to understand that.
And they can be priced in anything. They can be priced in houses. They can be priced in cars. They can be priced in any. That's what a unit of account is. It can be. You can price gold and Bitcoin in apples if you want to.
You can price it in each other, and yeah, exactly. So it's all that part is totally subjective, and so even
it's an exchange rate.
Yeah, exactly. And so even that connection is really just because we choose to do that. It's not actually a real connection to the US dollar. Like, there's a lot of holders in the US of gold and Bitcoin, but and so the price will fluctuate and the value will fluctuate based on what happens within the US, based on what else happens with the dollar. But again, it's sort of like second and third order effects and connection to the dollar. And these things being completely detached, that is part of the value proposition, because everything else is directly attached to it. If you buy Apple and they're pricing all of their earnings in dollars, and those dollars are hyperinflating, then all of a sudden Apple is not worth much, because the earnings they got are just hyperinflated away, all the value they got, right? This isn't a crazy hyperinflation scenario, but it's why the Argentinian stock market has outperformed anything else. And it's because it's priced in Argentinian pesos, which are hyperinflating. So it's crazy how much of a safe haven these assets are that have no connection. Like, people, like TradFi people think, oh, Bitcoin doesn't have cash flows, doesn't have earnings. I don't know how to value it. What's its PE, right? It's like, because it doesn't have that, it makes it way more valuable. That's part of the value proposition.
And I was thinking about something. I made a video this morning about how people are just distracted by all the news, everything that's happening around them, left versus right, all this debate stuff. And they're outsourcing all of their knowledge to the professionals who also don't even understand Bitcoin, right? All they're doing is they're using these, let's say, these ratios, like price over book or price over earnings, but everything is denominated in this shitty currency that has no value. So how does that work? So there was one thing that I was thinking about. If you think about price to book, the book value is based on real estate or whatever the company owns, right? The balance sheet. Like, I think the real estate is probably one of the biggest things for a lot of companies, like McDonald's, for example. If we move to a Bitcoin standard, the value of their balance sheets is going to fall over time. So how do you value that? Where does that take McDonald's value if they have no Bitcoin? And then we have companies like MicroStrategy who are buying as much Bitcoin as they can, and they're generating 50, 60, 70% returns per year. and that's going to keep happening. And one of the craziest, one of the craziest things here. So with real estate, they're building their balance sheet with these assets, and the price of those assets keeps going up. It's going up at 5% per year, and it doesn't compound as quickly as something going at 50% per year. So think about with MicroStrategy, they have like almost $100 billion worth of Bitcoin already, $76 billion. Once they get to that 100 billion, they're going to get to 150 in a year, then 200 billion in a year, then 250, 260, 270, 300, 500. Their asset value is going to be more than the next biggest company at some point. That's absolutely insane. That's crazy.
They just have more though, and that maybe that's like that. I think that's my main takeaway from the conversation today is like you have to understand that there's fake assets and real assets, right? Like we've talked about that before, but it is a much different thing when you think about. And I used to watch Andreas Antonopoulos all the time. That's what kind of got me so interested into Bitcoin and helped me learn some fundamentals. But that was one thing that he would always say is there is no price of Bitcoin.
Yeah,
there's no price in Bitcoin. It's just an exchange rate. That's what it is.
Yeah.
And the exchange rate between Bitcoin and the US dollar, you can see which system people are putting more trust in. It went from $1 to $117,000 in a decade. That's not the price of Bitcoin going up. That's an exchange rate between the US dollar and Bitcoin. And it has just been blown out already. And it will only go in one direction, both ways. So I think that's the main thing here is like Bitcoin, gold. I would say that those are kind of like the two main ones. I wouldn't include real estate in there because real estate's tied into all that debt.
Yeah.
Real estate's got it's like the fiat system has a large, we'll call it a tentacle that's attached to the real estate market, but gold and Bitcoin are completely separate to that system. So even if that whole system collapsed, we might see like the price in Bitcoin go up, but it's just because everything in that system has just collapsed. That's what we're going to see happen. And
owning real estate is just another job.
Yeah,
right?
well, it is, yeah, but it's also tied to fiat. Yeah.
But what I'm saying is that if you're a company that owns real estate, you have to keep hiring people to work for you, and you're never going to win compared to a company that just holds Bitcoin. So gold and even gold, like gold doesn't even work the same way. For all we know, our neighbors could have $1 billion worth of Bitcoin, and they just have it stored in a seed phrase in their head.
Yeah. True. Right? You can't do that in the basement. Neighborhood would catch on pretty quick. Yeah.
It's crazy.
They'd see the armed guards out front trying to protect your gold.
What year do you guys think we'll need to hire security?
I don't know. Depends. It depends how bad Canada gets.
True.
Canada is on the decline, guys. Yeah. I don't know. It's hard to say.
Yeah, that's another thing we talk about or we don't talk about enough is like the exchange rate between the Canadian dollar and Bitcoin is what, 160,000? 165,000? I don't even look at it because Canadian dollars might as well be monopoly dollars. But anyways, we got a big zap here, boys, to report. So we got the ticker at the bottom there. If you do feel like supporting the channel, there's a QR code there beside Rajat's head, and it is Maple Bitcoin at Koinos.io. That's where you can send it to if you're watching on your phone. So big shout out to everybody who has been supporting. We get zaps kind of throughout the week on our videos. We had one from Bill 5251 on the other night. So just very, very appreciated. That's Maple Bitcoin at Koinos. But the 21,000 says price Bitcoin how Jason Lowry sees it in software. It's priceless. 21,000 sats, and it truly is. Nice. It is priceless. And there's a question about the military in here too, and that's the kind of first thing I thought of was software. Like, if you think for a second that the U.S. military is not all about Bitcoin right now, and so far beyond what we even can fathom ourselves, what do you guys think about that? That might just be my opinion, but when you see people like Jason Lowry, when you see Space Force and what that all entails and the language that they use and all that kind of stuff, like I feel like the U.S. government and the military especially they understand the importance of Bitcoin from not only just a survival standpoint, but like a national security standpoint.
Yeah, my understanding of his whole thesis is that like a lot of people think that he's saying that Bitcoin mining is going to be like a competitive thing for nation states, and so that they can have freedom to transact as nations. So there's going to be like a competitive like hash wars, right? And this
Yep.
is another thing that I think Max Kaiser talked about. But a lot of people think, oh, well, this is to replace physical kinetic war. And I don't think that's actually his thesis. I think this is just another battleground for nations to fight each other against. And if that takes resources, maybe that'll take resources away from as much kinetic physical warfare as we're having. But it's not going to all out eliminate it. Yeah, I don't know. It'll be interesting to see, but I do see the concept of like nations wanting to be able to interact with this asset and not being restricted against it. But right now, there is no restriction against anybody. It's very censorship resistant. Anybody can transact. There's no OFAC compliant blocks like Marathon was trying to do at one point.
Right.
Like, I think the Bitcoin network fights against that. So if it continues to fight against that, will there be the necessary, like, will governments feel like it's necessary to mine in size so that they can have transactions in their own blocks? I'm not sure.
Yeah, that's a crazy one to think through my eyes, is the how countries are going to start stacking this. And I would say I'm 99.99% sure that there's a lot of countries who are stacking Bitcoin right now and building the infrastructure to mine Bitcoin, and they just haven't come out and told anybody about it. Because why would you? Like, what would it benefit a country to tell people that you're accumulating Bitcoin and mining Bitcoin? What benefit would it be to the country? Why not do it in disguise? Because when you look at the sanctions that the US dollar, because they have the US reserve current or the world reserve currency, they were able to basically shut out countries from interacting in the global network, which was what's the network called that they use? Swift. And so they were able to just say, you know what, Russia, sorry, but you can't play with us anymore. You got to find your own way to communicate with people. And imagine if that ramps up and there's other countries who are locked out of it too. Like, that's a problem. And so the argument there is that if you're accumulating Bitcoin, if you're mining Bitcoin, you have the ability to hit a block, include your transactions in there, and basically use this communication system or network that's the most encrypted thing that exists right now. Like the SHA-256 is the most private and secure way to communicate with each other.
Yeah, that's a good good point. Yeah, like there has been the past where people have been pushed out from the current payment system. So there might be nations wanting to sort of front run that and make sure they have the ability to transact. Even though Bitcoin is an open network, they would want to still have some assurance of control of the ability to transact. Yeah, it's a good concept. The one thing that I would say as devil's advocate of why nations might not be so secretive about mining and holding Bitcoin is if you look at I think it was Bhutan. They mined Bitcoin. They didn't really talk about it, but they partner with, I believe, Bitdeer. And they hold as much Bitcoin as like their GDP or something. It's like an incredible amount for the nation. And they've sort of embraced it now. I believe they did a Al Jazeera news piece about it. And I think if it's a democracy that relies on votes, and if there's people that are in the government that have done something that would be seen as a positive, if it's around Bitcoin, they might want to be public about it so that they can win favor. So that would be my argument against why they would secret, because the argument for being secretive about it is they don't want to signal to the rest of the world, because then the price would go up and they would get less of it, right? That would be the argument against.
Yeah. No, that's fair. And kind of the way I think about the whole situation of war and how this is going to play out, like if you think about it from a very simple standpoint, right? Like, let's say there's the US government with the military that it has, and then you have some random ass country who doesn't have a military, but they have a bunch of gold. And so the US with a huge military, they go in, they assert their power, abstract power, as I believe it's referred to in software, abstract power. They go in, they take the gold, and that's it. The country can't really defend themselves because they don't have the resources for it. But with Bitcoin, if that same country had Bitcoin instead of gold, the one, if they secure it properly and they do things, multi-sig, big multi-sig, geographically dispersed, vaults, if they do all that, it removes all incentives to, attack. Because kind of what we talk about even as individuals is like, if you want to guarantee that you're not going to get my Bitcoin, kill me.
Right.
Which totally changed the whole dynamic of how power gets exerted.
Yeah, there's been, you look at the history of wars. I mean, people will say the Iraq War was about oil, right? And that oil was in the ground and it needed to be extracted and pipelined out, but there was no way you had to physically protect that, right? If you wanted to. There was no transporting that. There was no cryptographically keeping it secure. There was no ability to have that in different jurisdictions geographically. Yeah, it's so hard to protect something like that. And there's been multiple wars fought over resources. I mean, all the way back to cavemen hitting each other with sticks, right? It was like, you have more food than I do, or the whatever, right? Like it's human nature. It's
bigger stick.
It's not even just human nature. It's nature in general that fights over resources.
Right.
One of the concepts that he was talking about that I found really interesting was whoever has the best technology, most readily available to them, like let's say they have it accessible right away, they can take over anybody else.
Yeah.
Right? Whoever can exert the most force in the most efficient way is the one that's going to win.
Power projection.
Yeah. So like if you have Bitcoin is the easiest way to. It's like, I guess it's the most concentrated energy, and you can use it to pay for literally anything.
Yep.
Right. So if somebody wanted to, you can buy other people's skills with it. So you can buy other people's, let's say somebody's really great at making some kind of weapon. You can buy their skills. You can pay them in Bitcoin and you can buy that equipment that they can create and you can use it to your advantage. That's crazy. That just blows my mind.
Yeah, it's a bigger stick, right? If you have a bigger stick historically with plain text things, with things like gold resources, you got a bigger stick, you're going to get whatever the other side has. Caveman days,
bully anybody.
Nature, anybody.
You bully anybody.
Yeah.
But with Bitcoin, you can't bully people.
It makes it harder. It makes it way, way harder. It makes it,
if they have Bitcoin.
Yeah, exactly. So if you, it makes it harder to try to get that Bitcoin, and then it also makes it less likely that you're going to get the Bitcoin, because there's this ultimate scenario where you can't push that person to death, because if you do, you can't get the Bitcoin, right? So you have to, there's this other rule set to be able to get the Bitcoin, which makes the risk reward a lot less favorable for the person trying to project power to acquire Bitcoin from somebody. It's still going to happen, but it's less viable of an option for bullies that are trying to take Bitcoin.
Yeah.
Hold on. What's SVB? Do you guys know? Somebody on Nostr said, what is it?
Silicon Valley Bank.
Okay. This was a while ago. They said, devil's advocate, doesn't the fact that they saved Silicon Valley Bank show that nothing would happen?
That nothing would happen.
It adds more inflation to the system, right? All them. Okay, so the way that I see it, the people who had their funds protected through SVB, they were supposed to not be able to spend that money because that money was already spent. So now with the US dollar, because of that that protection, was called Bank Term Funding Program. Because of that protection, the people who were supposed to have lost their money now were able to spend their money. They're able to spend more money because they created more out of thin air. So the inflation was already, so the money was already used into the market. It was already added to the market. Whatever was destroyed, it was destroyed. Let's say the bank was buying investments that went to shit and they were worthless. But then there's other ones that didn't. And now that money is still in the market, but now they created more money and dumped it into the market because they gave it to these people whose accounts should have failed. So instead of destroying that value, they just created more value and replaced it. So it may seem like, okay, nothing happened. The system can keep going. It can keep going. And theoretically, it probably can. But you have to think of it from the perspective of trust. At some point, that trust is going to run out and people are going to think, okay, they keep doing this. When's the next one going to happen? And how much of my value is going to be eroded with that next printing? I guess that period of printing. How much of my value is going to disappear? And it'll keep going. It'll keep going. Some people will stay on. They'll stay on the U.S. dollar. They'll keep supporting the U.S. dollar, and those are the people who are going to have all of their value extracted from them, and it's going to be handed to these banks that are just gambling their wealth away.
Yeah, that comment stated that, you know, nothing happened, but as Rajat just said, plenty happened.
Yes.
There was money printing to make sure that those people were made whole. There was all this protection. There was a big bailout. It was a government bailout to make sure that everybody was okay, even though those individuals and those companies that held their funds with Silicon Valley Bank trusted a custodian that took on unnecessary risk, right? They invested all of the funds, or a large fraction of the funds that they held, into long-term dated bonds, which was the worst thing you could do during zero, through the ZIRP era, zero interest rate policy era. The dumbest thing you could possibly do. I have no idea. Like, that person who did that is just the stupidest person in the world. So when it came due, when that became known, people said, "Oh, this bank actually doesn't have our money." Because their bonds that they bought for $100 are now worth 80 or 60.
Yeah. Wow.
So if they redeemed them all, if they sold them all, there's going to be a liquid market. They're going to probably get even less for them, and they're not going to be able to make everybody whole. So I want to make sure that I get my money out and I get made whole, because I don't care about anybody else. And, you know, there were people, I remember people back then being like, right, I was actively really watching this story, and people were saying, don't take your money out, everything's fine, right? And it's because if nobody took their money out, everything would be fine, right? Because it's all an illusion, right? Like, the money isn't actually there. It's invested in an illiquid product, but it is there. Like, it's there and it's not there. It's this like Schrodinger's cat of money being held by this bank. And so it's like, and it all comes down to trust, right? So these people trusted their money in this bank, and then the bank did something ridiculously stupid with their money. They like invested in illiquid long-term bonds. It all comes back to trust. And it's like, if you have your money in a bank, you're trusting that bank. If you have your Bitcoin in an ETF, you're trusting that ETF issuer. It's just, there's no reason for all that. Like, people will say all these things about Bitcoin. Oh, it's permissionless, it's censorship resistant, it's a trustless system. What that means is you don't have to trust somebody else. You can because the Bitcoin network, but the human technology around Bitcoin has created systems to be able to trust other people with your Bitcoin. But the network itself is trustless, so you could own it yourself.
That's the best part, right? You have a choice. You can choose
Exactly.
if you want to take self-custody if you don't. You can choose if you want to leave your money with an exchange, or if you want to put it in your own wallet, and you want to go into that education where you take self-custody and now nobody can mess around with you. There's a couple of things that you said there. So one of the worst parts about this thing is that person that said, "Oh, nothing happened," they're a frog in a pot with water that's boiling, and it's getting worse and worse and worse, and they haven't noticed yet because the temperature is rising slowly, and they're not able to connect the dots because they're so busy with just their day-to-day lives. Most people don't connect the dots, right? They can't connect the dots because they don't remember. If you don't write down, okay, the price of this thing was at this point at this time, now it's at this point. The prices move up slowly, right? They don't happen. It doesn't happen all at once. You're going to see, let's say you go to Costco, you're going to see, oh, chicken thighs cost $9.99 a kilogram today. Then the next time you're going to go, it's going to say $10.49 a kilogram. Then the following time you go, you're going to forget that the price even rose. Like 3 weeks later, you're going to see it went up to $11 per kilogram. Then you're going to go back like a month later, $11.49 a kilo. It rises slowly so that you don't notice. And that's why 2% inflation is so deadly. That's why central banks want 2% inflation. It's death by 1,000 cuts. You don't notice it. You don't notice it's happening. And by the time you do notice it, when you, let's say, for example, you keep putting away $10,000 a year, you keep doing that for the next 30 years. by the time you've retired, the money that you've saved is nearly worthless. They're telling you that inflation is 2%, but the actual inflation rate's like 7, 8, 10%. The Federal Reserve's goal is 2%, but because of things like Silicon Valley Bank, because that money wasn't destroyed and it was just added, it was replaced essentially. The people who took that money, whatever let's say if the bank bought all these debts, they still have that debt. That debt is still owed, but now there's they basically double spent it into the economy. They added more money, and you're not going to see that immediately. You're not going to see the change immediately. It's going to take years. It's going to take that. That's why we have these 4, 5, 10-year cycles, right? All these cycles that Ray Dalio talks about. People start noticing after things get really, really bad.
Yeah, I mean, inflation is a parasite, but it's not. But they hope that they can just have that parasite leech off you without killing you as the host, right?
Yeah.
An analogy that I use is that, like, you can go and donate blood to a blood bank every other day, right? You might feel a little woozy, a little less energetic, a little weaker from it, but it's not going to kill you if you keep doing that. But if you go and donate all of your blood, like you're dead, right? So that's kind of that's a hyperinflation environment, right? They try to extract all that value out immediately from those dollars, or they sort of are forced to by lack of trust or whatever, right? So that's the host dying, right? But they hope to keep you alive for as long as possible. They hope that 2% inflation is just not bothersome enough that you don't notice it day to day. You're not paying close attention to what the price of chicken thighs are every time you go to Costco. You know, it's like you just, well, it's you knock it up to, oh well, we're seeing tariff inflation, and we're seeing geopolitical war, we're seeing response from COVID, supply shocks. There's always a reason that isn't the fact that they're just creating more money out of thin air.
Yeah, it just keeps getting worse. Like we can see here, in 1966, the total amount of debt that the U.S. government had was $320 billion. I think it is. Yeah, $320 billion.
Was it billion or million even?
So millions is millions of dollars. So it's 320,000.
Oh, yeah.
So 320 billion, 321 billion basically. Now they're growing at 320 billion every couple months.
Isn't it a trillion every 100 days?
Is
Something
that it?
like that.
Is that it? That's crazy. See, that's the thing, right? At this point, how long did it take for the U.S. debt to get to a trillion? So it took until 1981 to get to a trillion, and the U.S. was a nation since what, 1776? So 205 years. Is that what it was?
Could be. Yeah, I'm not 100% sure.
Okay, so let's say 200 years to a trillion. The next trillion, so the trillion was reached 1981 Q3. The next trillion took
like 3 years.
1981, 5 years. 5 years. Then the next trillion.
That's crazy.
Let's see what the next trillion was. So the next trillion was 1990, so 4 years. And then, sorry, my camera's in the way, so I'm gonna skip over a little bit. So I'll go to 5 trillion here. So at 5 trillion, it was 1995 Q4. And, it slowed down a little bit, I guess. But then
in the 2000s.
accelerates.
Okay, so in the 2000s, Clinton was seen as like a genius because he was able to lower the amount of debt and all of this. But it's because of the technological boom of the internet.
Yeah,
it was the deflation going on from the technological advances happening.
Oh, that's so I didn't know. I didn't even make that. I didn't make that connection. That's insane. I made the connection of the technological boom, but I didn't make the connection of the debt. What you just mentioned, the Clinton thing. Okay, so 2001, it was at 6 trillion. Q4
they got massive tax receipts, right, because of that.
Yeah.
But yeah.
Q4 2003, it's at 7 trillion. So 6 trillion to Q4 2001 to 7 trillion Q4 2000. So 2 years to get to a trillion. Okay, so what it gets, you can actually see it gets steeper here, right?
Yeah.
So at this point, 2008, 9.5.
It's a big print event
so
right there.
Q2
trillion a year.
Q2 2008 to Q1 2009. That's that's 2 trillion. No, that's 1.6 trillion. Holy,
1.6. Holy smokes.
like in that short. But then take a look at this. Take a look at this is even worse. So you go from 23 in 2020 to 26
Oh,
in a quarter, in 3 months.
Part of that
Oh.
is a revaluation of what it would be considered within this. Or sorry, no, this is public debt actually. I
Yeah,
was
this is
thinking
public debt.
they adjusted what M2 is, but yeah,
M2,
no,
M2.
this is public debt. Oh wow.
Yeah, this
Okay.
is public debt. And then like that's so if you take a look at so now we have this context, right? So it took until 1981 to get to $1 trillion worth of debt. Right? So we have the number here, 1981 Q3. Now if we take a look at the US debt clock, if you once you connect these dots, it gets crazy. So take a look at the interest on the debt. This is every year.
Yeah.
trill.
They're accumulating $1 trillion worth of debt on something that doesn't even appreciate in value.
That's just
And
the
doesn't even
interest.
really exist.
It's
Just a big
how-
spreadsheet.
I just wonder how
Yeah, that's it.
anyone could see this and not think this is a problem. This is a massive
Yeah.
problem.
They're
this
spending
is-
more on interest than defense.
And that this isn't going to end well, right? That's what I see.
Yeah.
I see this and just thinking, however this ends, if it's hyperinflation, debt jubilee, revaluating onto a new currency, none of that's good, right? Like this
Yeah.
is terrible. Even the other thing, if this just continues on, if this never breaks, it's still not good because it's still
Yeah.
just people getting less purchasing power over time by being savers, and everybody having to invest in assets, which causes a cost of living problem, as those assets are directly connected to how you live, commodities and real estate and whatnot. It just
Did you
none of
guys-
this looks good.
Did you guys see the projected debt? So this is the projection. Have you guys seen this picture before?
No.
This is actually crazy. Okay, so this is how they gaslight us, right? So the debt was going crazy. So this is in so 20 I guess this is done in 2024. Okay, so from 2024 they said that the debt would gradually increase as a percentage of GDP. At that point, it was at 100%. So about 100%. They expected that it would get to 120%. So I'm just trying to match the numbers here. So it seems like they expected it would get to 120% in like 2042. Oh, sorry. I didn't even realize I wasn't sharing the graphic, but this is, have you guys seen this chart here before?
No.
Mm-mm.
So these are the projections of how much debt the US government will take, US federal debt as a percentage of GDP. So you can see here in 2020, like 2024. Oh, it says February 2024. So in February 2024, the US debt was at 100% of GDP. You can see the number here. So 100, 2024, about 100, right? Do you guys see that?
Wow. Yeah.
Yep.
Yeah. 100.
So they expected that in 2040, let's say like 2040, it'll be at 120%. You
So
see that?
there's no growing out of the debt, basically, is what they're showing.
So what they were no. So this is what they expected. They expected that this is what it's going to go to. So let's go back to the U.S. debt clock. Now let's see what the percentage is. So you can see here, 123.89%. They expected it in 2040
Oh
to
wow.
hit 120%.
It's already been exceeded.
It's
That it's already been
123. 123 is
123. So they expected it to hit in 2040, but it's already there.
that's insane.
And they just made that last year?
This was
In-
February of 2024. February 2024.
so
the whole-
why did those people
everything
have
they-
jobs?
Yeah.
Yeah.
Like once
Everything they do is just gaslighting like this, man. It's
it's
all
it's
it
a
is.
scam.
Yeah.
It's all it's so okay. So based on that information, and people still not thinking that, oh, this thing is going to collapse. I think it's going to take longer than we think.
Yeah.
I think there's a long way to go. Like just based on because all the information's there, you're being
Yeah.
gaslit, and everybody has this information if they want it, but people just want to create TikToks complaining about how bad life is.
It's true. But the thing is, right, like it is going to take longer, and that just means more suffering for people, like
Yeah.
a longer amount of suffering. I actually like it's really hard to quantify, but I actually think a hyperinflation event would be less suffering overall. But
Yeah,
that's
it
not
would.
what we're going to
Yeah.
see. I mean, it would be more suffering condensed, but then we'd be able to rebuild. And there's this other monetary network that wouldn't do this, right?
Yeah.
If you're in a hyperinflation event and somebody says, hey, this other monetary system, you can use it, you can send value, you can hold value, and it's never going to do this because there's a max supply and there's a fixed issuance, that person's going to be pretty receptive to that, right? Because that problem is incredibly obvious. Right now, the problem is there, but it's not so obvious that people are seeing it every single day. They're seeing it every year, every 2 years. So it's taking them a long time to adopt something like Bitcoin. You know, you have to see it over, like it took me years before I fully adopted Bitcoin because the problem wasn't bad enough, right? The
Yeah.
problem wasn't bad enough that I cared enough to figure out a solution to it.
Yeah.
So yeah, I mean, it's hard to quantify, but that's not necessarily what's going to happen. We're probably just going to see this long drawn out thing, and more people are going to save themselves from this, right? Like there's that famous quote from Trudeau mocking Pierre saying, oh, you can opt out of inflation by buying Bitcoin, right? And then it's like, yeah, that's exactly it. Like that's a really good way to put it. You can opt out of inflation by adopting Bitcoin.
Yeah.
Yeah.
That this whole conversation reminded me of this quote. And actually, the more I think about it, because how we started this conversation was this could go quicker because information is much more readily available here. But as we were talking through this, it made me remember this quote here. And this is so relevant to exactly what we're talking about here, which is if more information was the answer, we'd all be billionaires with perfect abs. So it's like the information's there, but the problem is that nobody's willing to do anything about it. It's the actual act of people doing something about it, which is going to accelerate this. More information doesn't mean anything if people are just going to say, well, it's a write-off anyways, you know, or they don't even want to think about it too much. Information's there, but that doesn't mean that people are actually going to change anything about it. So it's the act of people taking action essentially that's actually going to accelerate this whole thing.
There's this comment from Musashi here. Fiat debt is not designed to be paid off. It's designed to be tolerable by the uninformed masses with no education in economics. That's exactly it, right? The whole system is just people taking advantage of other people because of information asymmetries. That's
and
it.
ability to act on it too. Like a lot
Yes.
of it's the information, but then it's like you can be too scared to do it. Like a lot of people are scared to take advantage of the system.
I would say that's information asymmetry because once you understand how Bitcoin works, like there's fear, but if you put in enough time to understand how it works, then I think it's very difficult not to opt out.
Yeah,
right? Like
that's a good
I know
argument.
people who are completely risk averse. I'm pretty risk averse now
Yeah,
that I'm like really thinking about it. Now that I'm like really wanting to build wealth for the future. Before I was I was a huge risk taker because I would buy like options, 0 days to expiry options because I just wanted to hit the jackpot, right? And it was just a way for me to do it. And I was I was a risk lover back then, right? But now it's like things have changed because you can see that Bitcoin is actually making a difference.
That's really interesting. So yeah, to me, I was always risk averse. That's why, like, that's what led me to YouTube, right? Because I was like, oh, I can make a business without any cost of capital to front it. I can, and then when I started investing, it was like in REITs because I believed real estate was always kind of going to go up to some degree, and S&P 500 funds, and then that led me to Bitcoin and gold because I was like, oh, this is even less risk. My lack of risk tolerance led me to Bitcoin, which was crazy.
Only buy Bitcoin with the money you can't afford to lose. That seems pretty risk adverse to me.
Yeah.
There's a good comment here from Gandalf. Said I use the current system to my advantage. You know, I was listening to, I was going to play a clip here from Adam Watts, but I don't know if it fits in here today at all. But that same video, it basically talks about the fact that once you are, he called it essentially being awakened. The video is about seeing things before other people and kind of how your life is impacted by that. But I think kind of what Gandalf is saying here, what I thought of anyways, is like, if you understand that the whole system is an illusion, if you understand that it is just a big game, and once you kind of get to that understanding, you can kind of withdraw yourself from it while still competing in that game. You don't have to necessarily move out to the woods, never talk to anybody again, and, you know, just completely shut out the world. You can take advantage of it. You can use the tools that this stupid system has available to you and you can actually play the game and win the game because you know that it is a game, right? Like I think that's where a lot of Bitcoiners go wrong, is they think that once they have enough Bitcoin, they can just completely withdraw from the system. But it's like, do you need to? If you can see it, if you can see the game as it is, but you can still play it while not taking it too seriously and not getting too stressed out about it, that's kind of the balance that you want to find, I think.
Mhm.
Yeah, and that comes with education, right?
Yeah.
Like people are so panicked about I feel like I was like that before because I didn't quite understand what's happening. I didn't understand human psychology. I feel like there's so many things that have to come together for you to really understand Bitcoin and to get to this point where you're okay, like you're fine. Like at this point, I'm just thinking. So if all of us are probably at risk of somebody trying to take our Bitcoin from us, right? At this point, I've accepted it. If it happens, what can I really do? I mean, I've done whatever I can to protect myself, but if somebody still wants to take my Bitcoin, they're going to do it.
Yeah.
Right. You just have to accept it at this point. And I think that's what comes with understanding how Bitcoin works. You understand that there are trade-offs. You have the best asset in the world, but you understand that there could be a lot of volatility along the way. Right. And once you understand that, that comes with education, and then that gets rid of the fear, and it helps you to really increase your allocation to Bitcoin much more easily than let's say the legacy financial system. In the legacy financial system, like everybody says, only buy stocks with the money you can't afford to keep or you can afford to lose.
Yeah.
Mhm.
Even with your
staying, like it's in the system.
Yeah. Even with your Bitcoin, though, I feel like Bitcoin, unlike the stocks or gold or anything, like if you do secure it properly, even if somebody did try to take it from you, they can't.
Yeah.
And I don't think that many Bitcoiners have that set up yet, but that's something I think that everybody should be kind of working towards with that.
Yeah.
We got a couple super chats here, though, boys, and we got a couple zaps to report. So we got a 373 with 3 salutes there. So 373 sats. And 3690, a fat Tesla zap. Thanks, guys.
Wow.
Greetings from Germany, Alexandra.
Nice.
So thank you very much. A couple super chats here. I don't know if they're questions or not, but Isaac says, I divorced my wife because she said Bitcoin was a Ponzi. Bitcoin over hose. And Isaac also fiat zapped $2. Said, I opted out of my marriage by buying more Bitcoin.
Sounds like this maybe just happened. It seems pretty raw.
Any ladies out there looking for a Bitcoiner? It looks like Isaac has some fresh wounds, but could be available soon.
UPS gave a massive raise to their drivers too. So if you take a look at the picture, he works for UPS.
Oh,
interesting.
nice.
See, I thought he invented gravity. I didn't realize he worked for UPS.
I mean, they both are pretty valuable. The people who deliver your packages and the people who invented gravity. Nav 499 says Unibuy still gets to me. What can y'all beat it out of me with logic? Of course.
Just price it in sats.
Easy.
It's that simple. It's that simple.
I think one of the things that really hurts people is thinking that, when we say, for example, houses are going to be worth 0.1 Bitcoin. It sounds crazy. It sounds ridiculous. But if you break it down, like Forrest said, price it in sats, 10 million sats seems expensive. 10 million of anything for a house seems expensive. At some point, that will seem expensive to everybody because 0.1 Bitcoin, how many people can have 0.1 Bitcoin? 210 million?
It's just math.
Total, yeah, it's just math. So if most people can't even have 0.1 Bitcoin, then how's the price of a house going to be 0.1 Bitcoin? If most people can't have 0.01 Bitcoin, a million sats, how many people can have 0.01 Bitcoin? 2.1 billion. But then you have a bunch of people who own a shitload of Bitcoin, like Michael Saylor. He owns 3% of the supply. BlackRock owns like 4% of the supply. There are other people who own tens of thousands of Bitcoin. So most people won't be able to buy 0.01 Bitcoin either, right? So how are house prices going to be at 0.01 Bitcoin? So think of it from the perspective of price. When you price things in Satoshis, it doesn't make any sense. And then Jor and I always talk about this thing where there's 2.4 billion houses in the world.
Yeah.
Right now, one house is worth like 4 or 5 Bitcoin in the US. So if you think of it in Satoshis, 4 or 5 Bitcoin is not achievable for the majority of people. If you think of it in Satoshis, that's going to get rid of your unit bias. Just get as many of these 2.1 quadrillion Satoshis as you can, and you increase the percentage exposure of your total portfolio to Bitcoin.
Well
Yep.
said.
Yeah, I had something else to talk about that, but I mean, it's oh, that's what I was going to say. It's like the longer you spend in Bitcoin. So I went through this kind of phase where I understood Bitcoin. I realized that everything was going to be repriced in Bitcoin. I fully grasped the concept of literally everything on this planet divided by this number right here. And then I was like, well, eventually, probably within my lifetime, 1 SAT is going to be equal to $1. So if I'm not spending this money that I've taken in today, why don't I just put that into Bitcoin? Because when the time comes, when I do need to spend it, these are going to be worth a lot more. But then I actually moved to the point where $1 for 1 SAT, that's actually on the low end, I think, just based on where things are going. And like Rajat just said there, take the total amount of houses on this planet, which is about 2 billion, divided by this number, and that gets you to about 400,000 sats per house, I believe. Or what did you say it was, Rajat? 200,000?
I think it's like 800,000
Or
cents.
800,000. Either way.
Less than that.
And that's if the only asset on this planet was houses.
Yeah.
Mhm.
But that's not the case. There's land, there's vehicles, there's time, there's productivity, there's this laptop, there's this beer, everything out there divided by this number right here. And I think it was actually Forrest who introduced me to the game Snake, Bitcoin Snake. And on there, I don't go on there very much anymore, but I'll check it once in a while. And yesterday I had 1 SAT available to withdraw, and I withdrew it because I didn't want to lose it. Because after like 3 days, you lose your sats on there. And I'm like, man, I'm at a different level right now in terms of valuing that. Because anybody on the surface level would call me insane for withdrawing 1 sat. But it's like, I know where this is going. That's a finite piece of this pie that I now own. Why would I give that away?
They're all precious, each one.
Yeah. And if you're still thinking of it from that unit bias perspective, think about how much the cost of 1 million sats has increased in the last little while. At one point, you could buy. Actually, I'm going to share my screen here. I think this is probably the perfect time to show the Satoshis to Bitcoin chart. Let me show you guys. All right, I'm sharing my screen. Okay, so what you see here is in February of 2010, you could buy 10 billion Satoshis for $1. So 1 Bitcoin was worth 1 penny. In July of 2010, you could buy 1 billion Satoshis for $1. In 2011, you could buy 100 million Satoshis, so 1 Bitcoin was $1. Then June 2011, you could buy 10 million Satoshis per dollar. And over time, that's increased and increased. Today, what's the price? Let's say the price is around, it's 115K. Today, you can buy 870 Satoshis per dollar. It went from 10 billion to 870. And this will keep dropping at one point. We know that Bitcoin is going to go to $100 million at some point. At that point, 1 Satoshi will be $1. So if you can buy 870 Satoshis for $1 today, at some point that 870 Satoshis is going to be worth $870. So that's one of the things that I like whenever we talk about these zaps that we're getting. That person who sent us like 20,000 sats, what was it?
21K.
21K. At some point, that's going to be worth $21,000.
I got to make a pleb tool of this spreadsheet. This is, I think this really helps people understand the true value of it, because the value, everybody's looking at the value of it today of what Bitcoin is, but when you project it into the future, the numbers just start getting insane.
Yeah.
And they're completely realistic, which is what's wild about those numbers. Like, you have insane numbers that are realistic. You want to be a part of that. You want to hold the finite asset that everybody wants.
Yeah. Like today you can buy, okay, so at one point you could buy 0.00047% of the entire network with $1. Today you can buy this amount. Look at how many zeros have been added before that 4. Like, you're getting near, and this number is just going to keep falling. You can see here, it goes from this and it drops down to adding even more zeros to the left of that number. Crazy.
It's insane.
That's why I withdrew it.
Yeah, you got to get that one.
Thinking about my great grandkids. That 1 sat's going to be their Who knows? Like if you projected that far in the future, my kids, their kids, their kids, one sat could honestly purchase a vehicle. Because again, you have to think about everything divided by those numbers, and that's the upper limit of it.
Mhm.
So that there will be less than that. It's going to keep going down. The available amount of sats is going to keep going down. It cannot go up from that. So a mixture of more people joining the network. But here's the thing: somebody said that's not going to happen within our lifetime, but it's literally happening right now, right before our eyes. Even though nobody's declared Bitcoin to be the official unit of account, it's repricing everything, and that's what we're seeing. You look at housing prices, you look at the cell phone graphic that we looked at last week. That's literally what's happening as we speak right now.
That's what
And
that chart
there's so
showed.
few.
Yeah.
What's that?
That's what that chart showed. That was
Exactly.
just showing. It is happening.
It is happening. And there's just not enough things to be priced in that amount of sats. And so therefore the value of all those things will fall in that denomination.
And then over time, you're going to have more entrepreneurs who are willing to give whatever they can create for Bitcoin, and that amount of that stockpile of goods that can be sold for Bitcoin is just going to keep increasing. The Bitcoin market is going to keep increasing, meaning that all of that value accrues to people who own Bitcoin.
Yep. And I think to get to that level of understanding, you really have to disconnect yourself from the fiat system, because if you think that that's not possible, you're still thinking about it in terms of price in US dollars, which that part of the equation is a complete illusion.
Yeah.
So you have to detach yourself both physically from the fiat system. So get rid of the real estate, the stocks, all that stuff is directly tied to the fiat system. You have to detach yourself from that, and also mentally, so you can start pricing things and valuing things properly. And if you do, depending on what your
Cash flow.
long-term plan is, you can
Yeah.
actually start working for sats and get more jobs that way. If you value sats, maybe not one-to-one yet, but if you understand the importance of this, you can actually get way ahead by detaching physically and mentally from the fiat system.
It's so crazy to me. People will reject Bitcoin because it doesn't give you cash flow. Like that's how low their level of understanding is. I think that's like a sign of. I saw this tweet from someone. That's a sign of lower intellect. You haven't studied Bitcoin. You haven't put in the time. You haven't put any time into learning how it works. If you're rejecting it because it doesn't give you cash flow, that's stupid.
Yeah. No, you have no understanding of what money is, because
Yes.
it's not a business. It's not real estate. It's not designed. Cash is not designed to give you cash flow. If it is, it's because you're taking on additional risk. Even with dollars, right?
Yeah.
Like dollars is what we all believe is money, or not all of us, but the people that use them believe it's money. The only way to get more money from your money is to put it at risk, right? Buy debt instruments with it. Yeah, there's just you could do that with Bitcoin. You're just taking unnecessary risk, and you shouldn't lend out your Bitcoin, but you could if cash flow was something that you wanted. And but once you learn what Bitcoin is, you just realize, oh well, the cash flow is the fact that it compounds, that its compound annual growth rate is like 50%. Like, how is that not cash flow? You know, how is like selling your asset and realizing a gain is a type of cash flow. It's just a reevaluation of your mental models that these people are not willing to do yet.
Yeah. And now you can take on debt against your Bitcoin. You can borrow against your Bitcoin. You can create fiat out of thin air against your Bitcoin, and you can use that to spend on whatever you want to. And it's tax-free. How is that not cash flow?
Yeah. It's like some of the best cash flow out there.
Yeah, it's even better.
Yeah.
Hold an asset.
We got 2 minutes left. Just
hold
realized.
an asset, let it do its thing, lend against it, and never pay tax.
That's it.
Like,
yo, we got 2 minutes left here,
need?
and Nav has asked another question. Should we just quickly answer it before we go?
Yeah.
Yeah, I mean, it's not really a question. He said
Great.
if you divide all the Bitcoin by all the people, it's about 200,000 sats, and that 200,000 sats would be earned over a lifetime in theory. Just hard to fathom it. I mean, that's what kind of what we're saying is just like, it's hard to fathom, but you can't argue math.
Exactly.
And that's if it's split equally.
That's exactly.
Like most people will, I don't think most people are ever going to have more than 10,000 sats.
Probably. Yeah. And it's, the 21 trillion sats or whatever, but it's way less than that because people are losing Bitcoin all the time. It's only going to go down, that number. And yeah, I mean, a ton of people own more than that that amount of sats too, right? Like they own more of it, which means that it's harder for those other people to get it.
Yeah.
Right.
So if you get to that amount, you're going to be above the average, way above the average.
Yes, so work towards that. And also consider joining the Maple Bitcoin School. Pretty easy link there, school.com/Maple Bitcoin. We have our happy hour starting in about 1 minute from now. We do it every week. And there's a lot of questions today. We didn't get to any of them, unfortunately, but it was a really good chat, fellas. If you do feel like participating in another hour of this and you want your question addressed or topic discussed, that's the easiest way to do it. You can try a free trial for 7 days. And then if it's not for you, you can bail. Not going to offend us. But yeah, that's it, I think, boys, for the week. These go by way too fast, but that's why I like the happy hours, because we can kind of keep the party going. And I still got half a beer here, boys, so look out. So yeah, thanks everybody. Consider joining. We'd love to have you over there. We want to have at least 1 or 2 Bitcoiners in every country on this planet, and we're going to build some really cool things in there. So if you want to get into ground level, it's only going to become more and more valuable, just like Bitcoin. Stake your claim in the Maple Bitcoin School community. We got a lot of good things going on and even more to come. So thank you, Rajat. Thank you, Forrest. Thanks everybody in the chat. And thanks for all the support today. We'll see you next week or in the happy hour. Thanks, fellas.